Hey everyone, this is your favorite radio host, Corinne Lafont, broadcasting to you from Trinidad and Tobago. Still a bit overcast, but it's a beautiful day. I'm always thankful every day for being alive and for being able to do what I do. Yeah. And I have with me today Lane Kawaoka. And guess where he is? One of the places that I dream and is on my bucket list to go. Hawaii. Okay, because I need to wear the coconut bras and the grass skirt. That's the goal. Wear the coconut bras and the grass skirt. Okay, nothing else. All right, so Lane Kawaoka is actually Japanese, he was telling me, and he is in Hawaii. So anything is possible, people. You can be from any nation and you can be anywhere in the world. There's no limit. So we're going to learn why. We're going to learn a little bit about Lane, and we're going to understand today we're talking about investments. We're talking about simple passive cash flow, which is the title of his podcast as well. We're going to feature that. We're going to learn today about investment. Everybody's looking to make money, keep money, grow money, build a legacy, leave for their children, keep the money flowing. Investment, we're talking about investment today. And real estate is one of the prime ways of building an investment. They always say, I've always heard that real estate is an asset. It always keeps going up and up and up. I'm not an expert. We have the expert here, Lane. He's going to be talking to us about that and how you can build. And I would particularly want to know how you can build from scratch. You don't know anything about investment, real estate, but you want to start building a portfolio of investment. Why real estate, how to do it, how to get started, and how to sustain it, because the key thing is sustaining it and making sure that it stays within the family and how to protect it. Yeah, so it's a number of things we're going to be learning here within this 30 minutes or more, depending on how the conversation goes. So before I welcome Lane officially, let me tell you a bit about Lane and then we go straight into it. So Lane is a full-time civil engineer and real estate investor from Honolulu, Hawaii. He currently has an 11 single-family home portfolio, nice, with experience in Seattle, Birmingham, Atlanta, Indianapolis, and Pennsylvania. He's also co-owner of MFPE Investments. He'll tell us about that currently controls 825 multifamily apartments and RV units. He journals his experiences in Simple Passive Cash Flow, which is his podcast that he puts on iTunes and Google Play. He said his parents got screwed with the 401k and stock market, and it's his mission to get everyone out of the corrupt Wall Street roller coaster and into Main Street invest with safer, higher returns that benefit the middle class of America and obviously the world. But of course, his focus will be on his experience in America, which we can take and learn from. So welcome, Lane, to Between the Lines.
Yeah, thanks for having me.
Yes, you're pretty young to know all these things. What is going on with you?
Yeah, I just started young and it's kind of rolled. I started in 2009 is when I first started buying my first rental property. So
At what? At what age?
2009.
Oh my goodness. All right, tell us about that. And what interests you? Tell us about that and what interests you in real estate.
Yeah, so my story is that, as an engineer by trade, went to college, studied hard like anybody else, and
typical
on that linear path. Yeah, very typical linear path. I bought a home shortly after because I was able to save the money for a down payment. And, because I was traveling all the time, which usually how those first jobs are, I was never home. So I just decided to rent it out. And I realized that the mortgage was paid by the rent income. And then there was a bunch left over. And that was a lot of beer money for like a young 20-year-old.
Yes.
So I was like, wow, I got to do this again. Because I realized like that was my way out of the day job.
Yeah.
That was my way to financial freedom.
Yeah.
So, I can kind of talk about, I had a day job where it got me capital to start investing. And I think a lot of, your listeners are entrepreneurs or
right.
At least, I mean, basically, if you don't have money, you don't have a job, sorry, I can't help you. There's a lot of other strategies, but, we're going to assume today that, you've got some capital, you're doing a good job.
Yeah.
And then now let's see how you can leverage that the best way.
That's right. That's right. So even if you have to borrow the money or something, but you need to have some amount of money to start. And what would you suggest would be realistic, but um, a small amount that somebody can get started with, and then start
Right.
reinvesting that? What would be a figure that you would work with?
Right. So in America, I started out with $25,000.
Okay.
A lot of places in America where blue collared workers
Mm-hmm.
work in good secondary markets.
Right.
You can get a house for $100,000. It's 3 bedroom, 2 bath, 2,000
Yeah.
square feet,
Yeah.
where the tenant will pay about $1,000.
Yeah.
So that's kind of the first thing I'd like to kind of talk about is there's different kinds of markets out there. There's primary, secondary, and tertiary markets.
That's right.
Primary markets are the markets that you always think about, like Los Angeles, Seattle, Hawaii, New York. You might as well scratch that off your list because number one, the everybody who's there has got a lot of money, so they think real estate investing is a good idea, which it is,
Mm-hmm.
but they drive up the prices,
Mm,
making the rent to value
mm,
ratios not conducive to investing.
right.
So another term there, rent to value, is this term that us investors use a lot
Okay.
to kind of really very quickly see if you're going to cash flow on that investment, if the income is going to exceed the expenses.
Okay.
So if you take $100,000 house
Mm-hmm.
and it rents for $1,000 a month,
Mm-hmm.
1,000 divided by 100,000 is 1%.
Mm-hmm.
So usually you're trying to look for something that's higher than 1% to be able
Okay.
to cash flow.
Okay.
So like take Seattle for example. You'd be lucky to find a house that's $400,000 there, and you'd probably be able to rent it out for about $1,000.
Mm-hmm.
So 1,000 or $2,000 a month. So that'd be a 0.5% rent to value ratio.
Mm-hmm.
So
Okay.
that would be a 0.5%, and that's definitely lower 1%. So you
Yeah.
probably would not cash flow. So I
Okay.
think that's the first thing that if you're poking around on Trulia or Zillow, take a look at the purchase price and then the monthly rents.
Okay. Come again with that, Lane. If the purchase price, so give us that example again in order to know if it makes sense to invest. You're saying the purchase price of a house, 100,000 was the figure that you were using. Yeah.
Right. And say the monthly rent is $1,000 a month. Take the
Mm-hmm.
monthly rent
Mm-hmm.
and then you divide that by the purchase price.
Mm-hmm.
So 1,000 divided by 100,000,
Mm-hmm.
that's the 1%.
Okay. And
So
you're saying it doesn't make sense.
anything less than 1% typically does not make sense numbers wise.
Okay. Okay. So it doesn't make sense to buy that type of house and then try to get rent from it.
That's correct.
So then you need something with a smaller price value attached to it,
Not necessarily smaller
or a
price
bigger
value,
or a
but
bigger rental value.
well, it's more, yes, more rental value, but you're probably going to have to look in a different market. So a lot of places that we buy are in secondary markets.
Mm-hmm.
So these are the less sexier places to live, like Memphis,
Yeah.
Birmingham, Alabama, Indianapolis, Indiana.
Who wants to go there if it's a secondary market and and you say it's less sexy, like you say? Who wants to go there? Everybody wants to go LA in the primary market.
Right, and that's why it's so expensive there because everybody goes there. But hey, we're investors, right? We invest for the numbers, not because it's pretty or it's a cool place to visit.
Mm.
A lot of times I don't even visit my properties.
Okay. Okay. You
And it's
don't.
boring, right? Like, why would I want to go to Kansas City, Missouri?
I don't know, but that's where you have your investment, right?
Yeah.
But if you should, if your investment is there, why don't you visit it?
Because I got better things to do with my time than to go play landlord. So that's the other thing.
Not to play landlord.
We employ third-party professional property management.
Yeah,
I don't want to go deal with termites, tenants, and
I see.
toilets.
So that's another thing somebody who's going into real estate should consider. You don't want to play landlord. You should hire as you said, a third party to be able to oversee that while you focus on really looking for places to invest to make more money.
Right. Stop being a landlord, being an investor.
Right. Okay. So give us some, okay, persons listening to this would say, I want to start off, I want to start off doing this. I want to get into real estate. Besides just the bigger picture of looking at the value, the rental value, and working out if it makes sense. A simple way of getting started. Somebody may have land, or they can purchase some land. What do you think? What are some possibilities for that person?
Yeah,
To move from
so
there.
first off, it usually determines, like, how much money do you have to play with, because that really determines your strategy.
Right.
When I always have a call with somebody, I always ask, what are kind of capital you're working with, and then how much time do you have to devote to this thing? And that
Right.
really determines what you're going to do. I mean, for some guys who don't have money, but have some time, they go the wholesaling route. They look for distressed properties. I don't do that. I just buy and hold. I've got a day job, and that keeps me busy. So
Yeah.
I just strictly stick to cash flowing properties where I don't have to do too much to it.
Okay.
So I look for existing properties that are cash flowing today.
Okay.
So a lot of times, you'll think of all kinds of strategy with real estate investing, like, you mentioned land investing. It's very speculative. I'd say that's what an individual does when they have, a few $1 million net worth, where they don't have to worry about having cash flow coming in. They don't have to worry about putting food on the table.
When you say cash flow property, so you already have an existing property that is in good condition that somebody can rent immediately and you can get the rental right away.
Right. A lot of times you can even buy it with a tenant in place from a previous investor.
Okay.
Those are called turnkey rentals.
Okay. So somebody's already in the place and they just continue renting it from you. So you don't have to look for somebody to rent.
Right. It's kind of like rental properties on training wheels.
Nice. What tends to happen here in the Caribbean, as far as I know, people may have land, just to educate you a little bit on how we do things on this side. And probably you can give some tips for that, because given that I'm in the region, people will be listening from in the region as well. So what people do, they may have land from family that may have passed on and they leave land, or they may leave land and a house. That they decide, okay, I'm going to either fix it up, it may be a fixer-upper, or they may crash the whole thing and build apartments on them, a number of apartments that they can rent out. Some people may lease the land to probably a business place, and so they're able to collect rent off of that. What do you think of those type of business models for persons who are into real estate investing?
So people don't they don't rent the existing infrastructure or land improvement.
No, it may have been passed on to them. So it's willed to them. They own it, because of a parent passing or an uncle or some relative, it passed on to them. So they don't really pay for it. It's given to them. It's willed to them.
So how does someone move up, in the economic structure, if you don't have money, if you don't have a family who given you something? How do you acquire something?
They will work. They will have their full-time job, like, you have a full-time job, and they can decide whether they may take a loan or they build up enough financial wealth that they can buy a property or something like that.
Yeah, so it's just very similar, like in America. Some people, you can buy a vacant piece of land,
yeah,
and develop on top of that, but it's a lot cheaper. But there's a lot more risk, and it requires, like, I think most importantly, time. Time is the most valuable resource.
Yeah.
To develop it, and throughout the process, you're taking on so much risk.
Yeah.
I don't know how it is there, but in America, we have, the government sort of subsidizes 30-year amortized loans for housing here.
Mm-hmm.
So it makes it very advantageous. We can get a 30-year loan fixed for about 5 or 6% with a 20% down payment.
Okay.
So it's very advantageous to buy real estate in America, and you combine that with our rent to value ratios between 1 to 3% on some of the better cash flowing assets. And
Right.
I just haven't found, I mean, this is why a lot of people want to invest in America
Mm-hmm.
in secondary markets.
Right. Okay. So
Or they come to, the primary markets, and they get sticker shock because they're like, wow, you can get $2,000 rent for this $400,000 property.
yeah.
Cool, I'll buy cash,
Yeah. Yeah.
and that's what a lot of Chinese investors are doing in America these
Okay.
days.
Okay. So I like what you mentioned the Chinese in investment, because the Chinese and Japanese, the Asians, tend to operate differently, and this is what I really like and respect about them. Their thinking of business is different to me. How another probably raised on nation may operate. They just their work ethic, the way they see things, the way they operate. Can you enlighten us in terms of that background as a Japanese coming from the Asian market? How is it that you guys operate in this manner? How did you all learn to do this? Is this a cultural thing? Is it something? I don't know. I would love to understand that.
Yeah, I mean, I've been in America my whole life, so I'm fourth generation American.
Mm-hmm.
But I think the differences are, like any other culture, America has a lot of immigrants, right?
Right,
And I think
right.
immigrants do it the right way. They work their ass off.
That's
They they take the worst jobs,
yes.
and they just grind at it for a few generations.
I like how you said that. It's not a few years, a few generations.
Right. But I think that the downfall of an immigrant is that they don't work. They're they don't work well with others. They don't team up. Perhaps they don't trust people.
Yes.
So, I think you got to know your the downfalls too. So what comes at hard work ethic
Mm-hmm.
comes at inability to work with others. So if you can work hard initially, but
Yeah.
still trust people and work together. I mean, working together and teaming up. I mean, that's how I bought all these apartments. I mean,
Yeah.
there's no way you can do it on your own.
Yeah. But you said something right there a while ago about immigrants. Because the fact that they're immigrants, they cannot trust anybody. They are coming into a different culture, different land. They don't know. So they have to stick together. They have to stick together, and they know their purpose. And just like you said, they work their ass off, not just for a few years or a few months. It's a few generations. And I want people to hear that. I want people to hear that, because it's not generations. It's not a 1 year, 2 year. It's 10, it's 20, 30 year each span at least. Yeah. And so we're talking a long time in order for somebody in that generation down the line to benefit from all the work from the past generations. So it's a lot of major sacrifice. And so you cannot comment on another person's country and just decide you're going to trust and share. You're doing this not only to help the ones who immigrated, but to help the ones that you left behind in your home country, to help them to have the life that you didn't have. So I could understand that. You can't open yourself to that. But I don't know, is that still existing? Is it still as stringent now, given more integration that's happening between races? Do you find that's happening now?
Yeah, I mean, I think I see, like different in America as like the melting pot of the world, right?
Yeah, yeah,
I think, somebody coming in, they can do it two ways. They can kind of speak the same native language and kind of stick
yeah,
to themselves,
yeah,
or they can force their kids to, hey, we're not going to speak our native language. You're going to speak American because you're
yeah,
America.
yeah, yeah,
So I see it two ways. And then, of course, there's a blend in the middle.
yeah.
Um, I think it's the kind of the blend in the middle. The balanced approach is probably the better way to go from what I see.
Mm.
But of course, I'm just kind of a third person looking in and what's going on these days.
So you have Simple Passive Cash Flow podcast, and like you said, this is where you share your experiences, and you have, from what I saw, it's like 110 episodes. Oh, you already celebrated 100 episodes. So you have 110 episodes, I think. You have been doing this from 2016. Yes, and we're in 2018, so it's about 2 years. And I'm noticing you have some wonderful reviews. People are saying it's one of the best podcasts out there. Quick, clear, informative, a little funny. Truly impressed and look forward to more. Great stuff, worth listening to. So why do you think you're getting such fabulous reviews? What is it about your Simple Passive Cash Flow podcast?
I think my podcast is very niche to the working professional.
Right.
A lot of people that kind of rave about the show are doctors, engineers, lawyers.
Yes.
The guys who are they kind of led this life of this lie of go to school, get a good
Oh,
job, you know,
yes,
work at that
Lane. We
job for
know.
40 years.
Yes, we know that. We know that story very well.
Same story, different country.
Yeah, and it's same story, different country doesn't work.
Right. Right. But I mean it's all a engineered system to,
To
hardworking
keep
people.
you. What is it? When are we going to figure the damn thing out? You still see it being perpetuated, Lane. Why?
Right.
And no matter how you try to educate and empower people, don't go down that road. They're still going.
Right, right. So most of my listeners, they'll make at least $150,000 a year, where
Yeah.
they can put away $30,000 to $50,000 a year. So that means they can buy one of these rental properties every year,
Mm-hmm.
and at a few $100s of cash flow per property,
Right.
you know, they can buy a property a year and increase that cash flow. And usually they can be financially free in 5 years.
Beautiful.
And
Beautiful.
then they can go into the job and fire their boss whenever they want. But a lot
Yeah.
of people they like what they do.
Yeah.
They're not lazy people, so they
Yeah.
like to contribute in the
So they still
society.
hold on, yet at the same time building, which is recommended. Nobody's
Right,
telling you to leave your day job or whatever you're doing to get a sustainable monthly income, but at the same time still build build a financial portfolio, build your wealth at the same time.
right. So you can have the freedom to do what you want, where you want, with whom you want,
Yeah. Which is what
and
everybody wants, that freedom to do what they want,
right.
when they want, how often they want, for as long as they want. Yeah. Yeah.
Simple.
1 second, there's a vehicle passing here. It's making a lot of noise. Yeah. So this is awesome. Simple passive cash flow podcast. So how often do you have your show? When does it air?
I usually do about one a week.
Mm-hmm.
Um, I have I interview different guests,
Mm-hmm.
and to help out that working professional or that high net worth individual.
Right.
And from time to time I'll kind of share with what I'm up to, what I'm kind of struggling with, because it originally started for a way to at the time when I first started this thing, I was just doing single family homes,
Mm-hmm.
and everybody was asking me the same damn questions, so I thought I'd put it in podcast form. But
Yeah.
then it's kind of slowly turned into more of a, I've been doing multifamily apartments and syndications of late, so it's been a kind of neat story.
Yeah.
People tell me.
That's the thing. That's the thing when you're doing a podcast. You might start off with it one way, or any business. You start off with it one way, and then it, depending on the kind of people that listen, it kind of ebbs and flows and evolves into something else. But
Right, right.
you mentioned multifamily units. What are those?
Yeah,
So.
so these are most times we'll invest in value add
Mhm.
apartment buildings that
Okay.
we can increase the value. So anywhere from 50 units to 253 units is one of my biggest ones.
Whoa.
So we'll
Okay.
bring in investors who'd like to invest and partner up, and we'll go reposition that thing and split the profits.
Okay. So you have 253 units. Each unit is like what, a two-bedroom? 2 bedroom, 3 bedroom type of thing?
Yeah, something like that. That one had a different mix of 1 bedrooms, 2 bedrooms, and 3 bedrooms. So
Right,
usually you're trying. It's an apartment community.
right.
So usually there's a mix between the families,
Hmm.
the single people.
Right, right. Yeah, single professional, just woman,
Yeah,
and whatever,
right,
people with
right.
children, that type of thing. So when you say you're looking for people who are investing, so somebody can come in and say, I want 5 units, I want 20 units, I want 100 units. Somebody can come in and do that.
So we syndicate deals. So what we'll do is we'll buy this asset,
Hmm.
put it into an LLC, and basically sell off shares of
Okay.
this. And usually the whole entire money that's in the investment could be anywhere from $1 to $5 million.
Mm.
So think of it like a stock purchase,
Yeah.
but
Yeah.
this is why we do it, and this is why I don't invest in the stock market or Wall Street, because there's about 1 billion middlemen.
Yeah. Yeah.
When you invest in this format, it's you and the lead investor, and
Mm.
that's it.
Yeah. Yeah. So it's
So
direct.
direct investment, right? It's not
Yeah.
as direct as you buying your property by yourself and
Hmm.
having your property manager, and it's
Right.
just you and them, or it's just basically you.
Hmm.
But some people are just too busy, or they just have too much money to invest.
Hmm. Yeah.
The single family homes are great, but at some point they're just not scalable.
Mm.
Once you start to have about 20 or 30 of them, I think you go a little bonkers. I think,
Yeah.
even with a property manager.
Yeah. So you have no faith necessarily in the stock exchange, which everybody is running down because it's the stock exchange, or
Yeah.
even this new thing that's up now, cryptocurrency, which people are seeming to be the rage these days.
Yeah, so I got out of the stock market probably about 3 years ago. I kind of got proof of concept, and I took everything out and put it into hard assets. My three rules of investing are: first, like I said, hard asset needs to be brick and mortar, not
Yeah.
something fake like Bitcoin or
Yeah. Yeah.
some 0.001% of Lululemon or whatever. The second thing is, it has to be leverageable.
Yes.
So that's where real estate comes in. You get these
Hmm.
good government subsidized loans, or you can get a good loan on it.
Right.
The third is cash flow, where your income exceeds your expenses and you're getting money every month.
Mm.
It's not like a normal investment where you have to wait till you're like 40 years down the road and you hope and
Yeah.
pray that you have enough.
Hope and a prayer. Yeah.
Hope and pray. Yeah, it's not a good way of doing things.
That's a good model. Hope and a prayer. Oh goodness, this is wonderful. I like what you're sharing, and I'm definitely going to start listening to your podcast. So because I like the idea of real estate. I've always loved real estate, and of course, people who have read and listened to Robert Kiyosaki, I mean, would understand the whole thing about real estate, and going into that type of thing would make sense, and what is an asset and what is a liability, and because some people still are confused about the whole thing about what an asset and what a liability is.
Right, right.
Yeah.
Great book, great book. But,
Oh, yeah.
it kind of falls short on like, okay, what do I do? What the hell do I do?
Yeah. Yeah. How do I do?
But I mean, my podcast is more for, the working professional. You got to have some money. I don't do wholesaling. I don't do flipping houses.
Yeah. Yeah.
That's a little risky.
Yeah.
If
Yeah.
you got some money, you just start off buying a single family home, or
Yeah.
buying buy an apartment if you got
Well,
more.
it's good that you're young and you have discovered this, and the good thing with young people is that they check, they're curious, they test, they take risk. Yeah.
Right. They
And so
Google it on their own. They research it, and
yeah. Yeah, yeah. You do what you have to do, and you may fail sometimes, and through your failure you realize, oh, that's not making sense, and you decide which way to go. And so it's good that you discover that while you're very young, so that you made a decision, an informed decision. So this is the route you're taking, and you're encouraging and educating others what to do based on you having been through it, so that they don't have to go through it again or by themselves. You have already gone through the heat and the cold. You're trying to avoid other people from doing that. So I am definitely going to be checking out your podcast, and I encourage persons to do the same, But if persons want to reach you, Lane, do you offer coaching or one-on-ones or advice, or what do you do? Or do people just listen to your podcast, learn from there? How can people get in contact with you if they want to?
Yeah. If people want to kind of get in contact with me, take a look, listen to some of the podcasts so we can kind of speak the same language. And then, my email address is lane@simplepassivecashflow.com.
That makes sense.
And if you guys are interested, I've got like a whole bunch of spreadsheets, analyzer spreadsheets and resources in this Google Drive I share. If you just want to go to the website, sign up for the Hui Deal Pipeline Club to get access to that.
Where do you get that?
If you go to Simple Passive Cashflow /club, you can.
Oops, hold on. I'm spelling it wrong. Simple Passive Cashflow.
Cashflow.com.
Oh.
/club.
CLUB?
Yeah. Join the investor club, and you'll get sent out that secret link to get the goodies there.
Oh, beautiful. So this is where people go, and of course you said start here. Obviously it makes sense. And if they want to contact you, they can go here.
Right. I do coaching, but I'm more for simple passive cashflow, and that's for me, coaching is trading time for money.
Yeah.
So,
yeah.
try not to do too much of it.
Yeah. And you're absolutely right. Trading time for money, and that is where it takes up your time. And like you said, time is the most expensive resource, and so you just focus on doing the stuff, which is your podcast, get people informed, and then you give them the tools and they take it from there.
Right. And then I put it out there, and it's kind of my way to give back to the world.
Yes.
Get people started. But there's some high net worth individuals out there, accredited investors, who just say, hey, I've seen enough.
Yeah.
Just invest with you.
Yeah. So this is a way to just join you in what you're already doing and be able to make money every month.
Yeah. Right.
Beautiful.
Beautiful. And keep doing what you're already doing at your day job.
Yeah. And is there a cost? Is there a cost to join the investor club?
No, everything is free there on the website.
Are you serious? Yeah. So for persons, let me see this form again, because I remember looking at it some time ago. If you're not sure what all of these things are, but you want to be a part of it, how do you decide? Are you limited to one or two, or you can click on anyone? You can choose anyone.
No, some people just click them all, but
that makes sense. I think that's a good approach. Just click them all. You don't know, just click it.
Yeah.
Just click them all. Yes, very good advice, Lane. Just click them all. Yeah, I'm definitely going to be one of those clicking them all. So this is nice. And you have, let me see what's going on here with you with networking. Let's see what's going on here. What's good? And how do you pronounce this?
The Hui.
Hui.
So it's a word in Hawaiian where, let's work together.
Nice. Hui. Yes. Okay, what is this about?
So that was another link to that other form.
Okay, great. All right. Well, Lane, this is absolutely awesome. I've learned a lot from you. At least to give not only myself, but those who are listening or those who will be listening a start, into thinking in a different direction. And a couple of things I just want to reiterate that, you said the stock market is not going to do it for you, and the trading hours for dollars is not going to do it for you. And you have found a way that could save people a lot of time and investment, and it's free. Time and time, because time is money. You're offering this for free, and it's, as you say, it's your way of giving back. So clearly they have nothing to lose by filling out that form and connecting with you.
Yeah. So
yeah,
it's not like it's $1 up, click a box. It's free. Click all the boxes you want.
Not even $1. Not even $1. Just click them all and submit your information. Oh my goodness. Thank you so much, Lane, for being on Between the Lines. I mean, it took some time for us to get here, but I'm glad we did. And I know it's pretty early. What time is it over by you now?
Oh, it's like 6 something in the morning. Yeah.
Yeah, I'm seeing some light behind you. So there's light out now. But
Yeah.
you got up pretty early this morning. Sorry for waking you up so early, but then that's the time zone. You're in Hawaii and I'm in Trinidad. We can't do anything about it.
Yeah.
So,
That's
yeah.
life. You're living
Yes,
in paradise. So.
that's right. That's life. So it's great having you on Between the Lines. And I am definitely going to click them all and fill out that form and see what else is behind that curtain to find out what else is going on so that I can learn more from you. And I encourage persons to do the same. You have absolutely nothing to lose. And it seems to me you have more to gain from somebody who has been there, done that, and who seems to be looking quite young and fresh and happy from what he's doing. There's no frustration, there's no stress, and still maintain your full-time job. Nobody's telling you to leave it, but look at real estate as an investment. And not only just real estate, the type of real estate. Am I correct, Lane? Any
That's
final?
correct. Buy and hold.
Yes.
Boring.
Yeah. Any final words before you go?
No, it's a pleasure being on here. Yeah.
Yeah.
Thank you.
Very good. Very good. So simple passive cash flow people, and he has some lovely templates that he will share with you once you fill out the form and you send your information to him. He's willing to share all that with you. Thank you so much, Lane, for being here. It's been a pleasure. Enjoy your weekend and keep
All
doing
right.
what you're doing.
You too. Thank you.